We're taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist at Standard Bank. Thanks so much, Nomvuyo, for joining us this morning. Let's get straight into it. We had the Rand off its session lows yesterday, so becalmed to an extent, and I was going through an RMB report this morning highlighting that bias is still for strength on this local unit. Is that a view you share?
Yes, absolutely, Alishia. There's very little at the moment which suggests that the Rand should tumble out of bed just yet. But of course, a lot depends on what happens with these Greek debt talks. Everyone was braced for some sort of conclusion on Monday morning. We'd been told that a deadline had been imposed, but that deadline came and went without much sign of a resolution. And so we're on to Wednesday and still waiting for some outcome from the Greek debt talks. And I think that's really what we'd need to see as a firm push in either in one direction or another. But for now, the risk on bias certainly seems to be still in place, and the Rand should continue to benefit from that. And
hinging on the hope that resolution will be forthcoming. Nomvuyo, when it comes to local data, though, we've had some of our own that's provided some nice cushioning to the local unit, and that where we saw unemployment yesterday easing to 23.9% in the fourth quarter, although that pace of job creation has not been fast enough to have a meaningful impact on the unemployment picture in South Africa. To what extent is this encouraging from your perspective?
Well, the unemployment data presented quite a mixed bag because, as you said, there was an unexpectedly large decline in the unemployment rate, and that should be welcome. That's certainly what we're looking for. But if you dig into the numbers, you'll see that that was a combination of, yes, jobs were created, and in sectors like retail and manufacturing where one would hope to see job creation, but then there was also continued job losses in a sector like construction, which has arguably a much greater potential for creating the kinds of jobs that South Africa needs. Also, it should be noted that the largest contributor to the overall gain in jobs came from the government sector. And I mean, your view on that is really going to depend on how big a part of the economy you think government should play. But in the event, over a third of the jobs created came from that sector. And of course, issues of sustainability then come into question. So there's quite a mixed bag when it comes to the employment data. And of course, as always, one would have to look forward to see how sustainable this drop in employment is going to be.
Yep, but how closely then, having said all of that, are you watching out for that mining and manufacturing data tomorrow? Because those are the two major sectors or revenue generating sectors for the South African economy.
Well, it was quite interesting. If you just look back to yesterday's movements, the Rand remained quite stuck in a range, and this was despite some very positive data that we had yesterday. If you recall, it started off in the morning with much better than expected reserves numbers. Then we get much better than expected unemployment numbers, but the move in the Rand wouldn't suggest that the currency was actually eyeing local data at all. It seemed to be very much driven by what was happening on the crosses yesterday. So, as always, mining and manufacturing data are typically market-moving data pieces, and we're expecting better results from both of those releases. So, on the face of it, one would expect the Rand to react positively to both that data. But if we see the same trend coming through tomorrow as we saw yesterday, then we might still, see not much of a reaction from the currency.
Let's take a look at data from the US, because that's where most of the attention has been, and that's been coming in positive as well. And one would assume that, you've got almost this tug of war happening within that, within the dollar-rand bracket specifically, and, in that cross specifically.
Well, yes, absolutely. I would say it's nothing new. I mean, markets are always focused on US data, and probably now to a greater degree than at any other time because of the troubles in the Eurozone. So the fact that the US economy seems to be pulling ahead quite nicely is certainly of comfort, and that I think that is also playing into the kind of risk-on attitude that we're seeing at the moment.
Let's run through your forecasts and what you've pegged out in terms of trading ranges for the rest of this week, Nomvuyo. First of all, on the dollar-rand front.
Well, dollar-rand, as we said, the strengthening bias does remain still in place, but we still think that 750 is going to be quite a tough nut to crack. So we're going to see the rand struggle to break below that level and probably continue to remain in the range that it is currently now, unless, of course, we get a big surprise announcement out of Greece that puts everyone's fears to rest. Then that might prompt that break below 750, but we're not forecasting that at the moment. Of course, the rand could also weaken, and we might see it then get as far as about 765 in the short term this week.
And on the euro dollar, of course, bearing in mind that we've got both the ECB and BOE meetings in focus tomorrow.
Yes, of course, those two events would be some risk factors as far as that's concerned. The euro rallied quite nicely yesterday, and we probably expect this to continue. Of course, a lot will hinge on what comes out of Greece this week. But that said, you know, the rand could remain on the back foot as far as strengthening against the euro is concerned. Will probably struggle to strengthen much further than this should the euro's rally continue for this week.